Welcome to your week ahead preview. The single most important event on the calendar is Wednesday's U.S. inflation report, a print that will either validate the market's recent risk-on surge or trigger a violent repricing of Federal Reserve rate cut expectations. Everything else this week is noise. That data point is the signal. Let's turn to the economic calendar, ranked by impact. The main event is the Consumer Price Index on Wednesday, August 12th, at 12:30 Universal Time Coordinated. Consensus looks for a continued path of disinflation, but energy prices and firm shelter costs are risks. A hot number here would slam the brakes on the equity rally and send Treasury yields spiking, because the market is currently pricing in aggressive rate cuts starting in September. A cool print, however, could be the fuel that pushes the S&P 500 decisively through record territory. Following CPI, we get the Producer Price Index on Thursday at the same time, which will confirm or challenge the CPI narrative on pipeline pressures. Also on Thursday, at 12:30 Universal Time Coordinated, weekly jobless claims will be scrutinized for any cracks in the labor market. On Friday, we close the week with U.S. retail sales at 12:30 Universal Time Coordinated, followed by the University of Michigan Consumer Sentiment Survey, which includes crucial inflation expectations, at 1400 hours Universal Time Coordinated. That sentiment number is a sleeper risk. A surge in expectations would force the Fed to stay hawkish. Finally, China is set to release activity data on Friday night, August 14th, covering retail sales and industrial production. With the Hang Seng and Kospi at elevated levels, any disappointment there will hit Asia-Pacific markets immediately. On central banks, the Federal Reserve is in its blackout period ahead of the September meeting, so no official commentary this week. The market is priced for a cut in September and roughly 2 additional cuts by year-end. Wednesday's CPI is the gatekeeper for that trajectory. Across the Atlantic, the European Central Bank is in its quiet period following its recent decision, but the minutes from that meeting are due Thursday. Expect heavy focus on any language about growth concerns, given the DAX's ongoing strength. The Bank of Japan remains the biggest wildcard, with US dollar to Japanese yen sitting at 157.75, intervention risk is palpable. Any hawkish commentary from Japanese officials or another surprisingly strong wage print could trigger sharp yen appreciation and a sell-off in the Nikkei, which is currently hovering near 65,600. The Reserve Bank of Australia releases its August meeting minutes on Tuesday, but with the Aussie dollar strengthening against a weak dollar, the odds of a near-term pivot are low. Watch for the Bank of Korea to maintain its cautious stance as the won rallies. The earnings calendar shifts away from mega-cap tech and toward the consumer and retail sectors. Walmart reports on Thursday, August 13th, before the market open, and this is our best read on the U.S. consumer's health. With the Dow at 54,000, expectations are high. Any caution on discretionary spending will drag the entire retail complex down. Cisco Systems also reports on Wednesday, giving us a view on enterprise tech spending and artificial intelligence infrastructure demand. Home Depot reports Tuesday and will confirm or deny the housing recovery thesis. If copper is any guide, trading near $6.59 after a pullback, the data may be mixed. Watch for outsized options pricing in Airbnb and Deere, both reporting this week, as their implied moves suggest double-digit percentage swings are possible, likely due to sector-specific catalysts. Geopolitically, the dominant narrative remains trade. Reports that Canada is making concessions to avoid imminent 50% tariffs from Washington introduce a risk-on catalyst for North American markets, but underscore the volatility that remains. Expect continued headlines out of Washington. Additionally, rising security risks have been cited as a key driver for Bitcoin's surge toward $65,000. Any escalation in that conflict will likely push capital into hard assets like gold and crypto. In corporate news, Berkshire's deployment of its massive cash hoard is a signal that one of the world's most famous value investors sees opportunity, but the market will watch his team's sector bets closely. Technically, we are at critical junctures. The S&P 500 sits at 7,757, pressing against the top of its trading range. A decisive close above 7,775 would signal a breakout, while a failure at that level creates a double-top risk. The Nasdaq, at 26,690, is exhibiting similar resistance. Watch Nvidia, Apple, and Microsoft as the leaders. If they roll over, the index follows. In Asia, the Kospi at 6,258 finds strong support at 6,150, while the Nikkei must hold 64,650 to avoid a deeper correction. Gold ripped higher to $4,399, breaking out of a consolidation pattern, and is technically targeting the $4,450 area. Any pullback to $4,340 should attract buyers. Bitcoin at $64,842 has clear resistance at $66,000, with nearby support at $62,000. The dollar index at a weak 99.60 is the tailwind behind commodities and the yen's strength. A breakdown under 99 would accelerate dollar weakness further. Markets move fast. We break it down daily so you don't have to. Subscribe for your edge, delivered fresh every session.